Thanks, Mahia. News that people are back to spending and investing sent stocks soaring on Thursday. The government's report that the gross domestic product also grew by 2.5% for the last quarter has some analysts excited for a strong holiday buying season. And taking a look at the markets this morning, the Dow just down a little bit, down 13 points. The NASDAQ down 12.91. Still a couple hours to go before the closing bell, so plenty could change. And one man who's used to the ups and downs of the market is Dr. Carl Bonham, Executive Director of the University of Hawaii Economic Research Organization. He joins us this morning with a look at what all this means. A lot of optimism in the stock market. What's behind all of this?
Well, you mentioned the GDP report yesterday, but really the big news was Europe and the plan that came out of Europe to deal with the sovereign debt crisis. Basically a three-point plan. One is to force banks that are weak banks in Europe to raise additional capital, to come up with additional money so they can offset the losses in Greece. Another part of the plan was to force bondholders, force investors in Greece to take a 50% cut in their investments there. And then a final part is to raise additional money in the European Financial Stability Fund in order to insure the debts of other countries in Europe.
And another thing that we were talking about earlier was the U.S. GDP report. There was a little bit of an increase there, 2.5%. How significant is this?
Well, you know, the significant part about that is that we've had several quarters in a row of growing GDP growth. Actually, 2.5% is about the average rate of growth that we've seen since the recession ended. So it was really the direction, the continued upward direction that was important. But, you know, there were some things in this report, the consumer spending, that's probably not sustainable. Consumer spending was up over 2%. You know, one of the things that we blogged about yesterday on the UHERO blog was the residential investment being extremely low as a share of the overall economy. Housing construction is at the lowest level it's been since the 1940s.
And is foreclosure also a part of the problem?
Absolutely.
there?
I mean, the problem is the overhang of foreclosed properties, the too many houses we built in the first place, and the lack of job growth.
And lack of lending, too, right, from the banks?
Yes, stricter lending standards. And all of those things have to be addressed in order to get the housing situation fixed. And typically, it's the housing construction that helps lead the economy out of a recession.
Dr. Carl Bonham, thanks for joining us here this morning. Also, you can find out what else the economists at UHERO are tracking by heading over to their Facebook page. You can also find a link to their website on the As Seen On section of KITV.com. It is 6:38. We'll be right back after this.